Well, results out from Jasco today showed a 7% fall in revenue for the 12 months to June, while diluted headline earnings per share fell 23% to 15.9 cents. And of course, this is against a pro forma number for the 12 months to June a year ago, because Jasco changed its year end from February to June last year. Joining me with more on these numbers is Martin Lotz. He's the CEO of Jasco. Martin, thanks very much for coming in today. You say in the commentary that it's been a challenging year with the global economic crisis impacting on your business. Of course, you are spread across a number of sectors, so there was a bit of diversity there which helps provide a buffer.
Yeah, definitely this year, the diversification strategy that we have came through again. The domestic products division turned its fortunes, the electrical division turned and had a good performance, which somehow offset the poorer performance by the telecommunications and security divisions. So it helps to be diversified.
Well, I mean, let's just run through some of those divisions and the highlights from those. So you mentioned telecoms and security under pressure. We had telecoms revenue down 21%, operating profit down 66%. And you say in the commentary that really affected by a slowdown in mobile network rollouts. Is this what this business really focuses on?
The biggest place where you get your turnover the last couple of years has been in mobile rollouts in South Africa and also in Africa.
And we've seen massive growth in those.
Massive growth, low penetration, still low penetration. In the last year or so, a number of those rollouts have just either been put on hold or they just didn't take place. And we're seeing something happen again, but those larger rollouts are the ones where you really can make your business fly. We had a downturn in, I think, a drop in 20% or so in our revenue, but a much larger in our operating profit because of cost savings that came through a bit later. But the core business is still sound.
How about all these undersea cables that they're laying all around Africa? Isn't that going to lead to business going into the future?
Yeah, we believe that the supply of bandwidth, together coupled with then the huge demand for bandwidth or just GSM facilities in Africa is definitely going to work. We looked at that. The increase in bandwidth over the next 2 to 3 years can be as much as 40 to 45 times more than what we have at the moment or that we had with SAT3 cable.
So would you expect, are you starting to see already some more of those cables and network rollouts happening?
You do see that happening, especially in the access network, because that is the area that you link the customer or the consumer to the networks. Jasco has always been very strong in the access network. It is our forte, it is where we play. So we're looking forward to some expenditure there in which we can benefit.
Well, you mentioned domestic products doing well, and of course this was the first business within your group that was affected by the slowdown, so you would expect that to recover soonest as well, wouldn't you?
Yes, it's very much linked to consumer confidence and the consumer expenditure. We see the consumer confidence up in the ratios that we see, but we see it in the expenditure as well. And we've had a very good year where the revenue is up 7%, but profit is up 44% because of working cleverer and making it a low-cost, efficient production unit.
Of course, you also bought Snapper during the period. That's the little plugs with the crocodiles on them, isn't it?
That's the crocodile plug. Plugs, it's adapters, it's the cord sets, a very well-known brand.
So very much aimed at the consumer market.
At the consumer, and we're looking to increase that.
Okay. Now, electrical, this consists of MTech and lighting structures, and there was a big turnaround at MTech. That's an associate company of yours. It went from a 6.5 million rand operating loss to a 48 million rand operating profit. How did you do that?
The biggest impact there was stock losses in the prior year, which they didn't reoccur this year. We had an increasing stock price, so there was none of that. But there's a much better market out there, especially in the copper side as well as in the aluminium side, where we do supply to Eskom. And we also found that the cost-saving initiatives that we put in place in the 2009 financial year started to come through in 2010 to assist the performance of that division.
Security, you talk about no big contracts coming on during the period. Security revenue down 30%, operating profit down 62%, but you do say recurring income increased by 22%, and that's really what you want to see, because you want to see that recurring income coming through.
Recurring income covers the overheads, and in good years like this, it actually gives you a profit. Just to put in context the large projects, in the prior year we executed about 80 million rands worth of turnover in large projects. This year we had none of those. It all dependent on the recurring income. A good year at 9.4 million profit, which is not as good as the year before, but that was exceptional. In history, not a bad performance.
Just a quick word before we go on the Spacecom acquisition. What movement are we seeing on that? When's it likely to take place?
Yeah, a lot of work has to take place now. We have to get the scheme document out to the Spacecom shareholders. We have to do a circular on our side. Fair and reasonables have to be completed. Competition Commission have to be done. We don't see this taking place before towards the end of November or really really to happen November, beginning of December.
So it could show into the second half of the next financial year.
We think the second half will be much stronger than the first half and
Right.
last year.